Good morning. Hope everybody had a great weekend. Market catches a cold. Hey, glad to know I wasn't the only one that got hit with this thing. I survived. Market will survive. Let's not get caught up in the gloom and doom. All right. So markets are down. Let's see where the levels are. So we'll look at different markets and get different locations. Maybe some are there already. So if you got this, Alex, I feel sorry. It was a nasty son of a bitch. Man, nasty, nasty. I don't think I've ever been that sick in my whole life like that. Anyway. So markets open lower here, supposedly on this virus thing that the world is concerned about. More or less, the market needed a reason to go down. We had talked about, we take a look at that again. The fact that the wrong way option traders were just loading up more and more on calls as the whole theoretical about the market starting a new bull market, which has been floating through the industry. And no, I'm not saying I'm not part of that thought that the markets were going to go lower based on the monthly charts and the breakout that happened from the October low, from a consolidation that was about 2 years long. I mean, that's bullish. But at some point, market's correct. It's just normal. And is this a reason for it to go down? Well, why not? Needed some reason. So now where's it going to go? We had talked about the fact, and you know what? It's a great example here to, being told one thing, right? And hearing it is part of the process. Experiencing it is a jump in your being seasoned as a trader and about the markets. And, for a while, I'm talking about the deterioration in breadth that was going on while the wrong way option traders were loading up on calls. And yes, the market it continued its grind. It was actually a grind higher, but nonetheless, it moved higher. And so now getting down to this bullish level, what does that mean? Not much, right? This has to come way down. And today will help that process begin, but it's got a long way to go before it gets to these bands. So these bands that I've created adjust, as you can see, they're pointing up now versus where they were flat here. So in a much more bullish market environment, and they start to lift higher because now the bullish levels will be higher than the absolute level down here of 120. But that's something that we'll monitor. So our internals, they did warn us that what was coming, but as the market always does, it never turns on a dime in situations like this. It doesn't. And I've seen it over the decades where it makes you doubt your tools. It always happens like this. They're bands, they're envelopes. I can give you I can tell you quickly without spending too much time. All right. So this is a 5 MA of the closing put call ratio. These bands are envelopes, a 100 MA of that 5 MA with a 10 and 20% envelope. And I've kind of just eyeballed, back tested this over several decades, and it works. Right? Anyway, so you've got your absolute levels of 0.80 and 1.2, and we know market environments change, and sometimes we have to change levels. So rather than change my horizontal lines, I came up with these bands, these envelopes that adjust for the market. So we'll see where this all goes. So let's just look at our levels here. Get rid of that. Back to here. And so here's a good lesson as we look at some of these things where we'll see some of these markets are on moving averages. While we use moving averages, we openly admit they are subjective. Episodes have been worse. Well, Cliff, I'm 64. I survived it. It was nasty. I still got it. I mean, you know, a little bit with some coughs and sniffles and whatever, but I'll admit it was terrible. And I haven't had even a cold in probably 25 years. So there's some powerful stuff going on out there. All right. So we see it's coming down, and you look to the left and you say, look at this little cluster of support over here. And you look at the hourly chart, which is on the other side of this drop, the big bottoming tail bar. What you see is, in reality, there's nothing there. So there's a void here. I don't know that it's going to fall down to 3,200, but just looking at this chart alone, without looking at the others, I would say yes. That's where I would want to buy it if it continued to drop down there. And the 50 MA is in alignment with that. So somewhere in this area would be my downside target. You know, we're just starting this day. Now I look at the range and I say, well, it's not quite as big as Friday, but it did gap down. So when now I take into consideration the size of the gap, I'll say, yeah, it is as big as Friday because it's moving lower. Anyway, so it tried to hold. You look to the left. It tried to hold that level, and it couldn't. So now it's heading lower. And I got the 15-minute chart down here. And as we look at other markets, should we consider this the possibility of being a W bottom? We have the momentum on the 15-minute, the downside. And what this would typically do at the open is break below this low, suck in the short sellers, and reverse back up again for a little counter trend trade. Ultimately, I think down here is where you get a big move, but let's see how this sets up. All right. NQs, NASDAQ 100 futures, sitting on the 20. The S&Ps were below the 20. It's another way of saying NASDAQ showing relative strength. No indicators necessary. They're holding over here on the support. We'll see if it stays there. But anyway, we got NQs sitting on some support that's directly to the left and on the 20 MA, where the S&Ps are in no man's land. But we have it creating support over here. So we have one reason to think that if the NASDAQ holds its support and started to go up here at the open, well, this could be a W bottom and we get a little counter trend rally. That doesn't mean it's the end of the move to the downside. Don't believe it is. Okay. All right. There, support, next level of support. Let me put my line down here. Way down there. YM. Down 455 points and closing in on its 50 MA. What's in alignment with the 50 MA? Nothing. So if it pokes down through the 50, all right, well, so be it. Many are looking at this, I think, as a reference point of a moving average. It's better to look at what more people are looking at, meaning not as many people are looking at the futures as a reference point as they would just the Dow. So 28,400 for the cash Dow, and that 50 MA is in alignment with that low. That makes sense based on how I look at the charts, right? And I say, I look at a moving average and I say, a lot of people are looking at that. Let me see if it's in alignment with something real. Yes, it is. There's a pivot low there. So that's a good reference point, that 28,400 in the Dow. Set an alert. See what happens. Diamonds. 50 MA. Right, little area there, look to the left, makes sense. So futures aren't aligned with anything with their 50 MA, diamonds, cash market, alignment with a swing low. Set your alerts there. Makes sense to me. Russell already, well, not already, really close to that prior swing low, so showing relative weakness. Kind of like a measured move situation. So what I'm thinking here for the moment, and that can change in 5 minutes at the open, what I'm thinking here is the market probably pushes a bit lower at the open and then looks to reverse and see what it can do. If it can't rally much, that suggests it's going lower. And let's look at the Russell here. And 163-ish, 163. Well, here's the low, but looking at that, 163. Yeah, give it a swing. There's a pivot there, so kind of reinforcing that bias of a gap down and possible reversal. Again, we'll see what happens. I didn't look at the Qs. 218. Let's get rid of this, put it up here. Oh, kind of an unfilled gap down there in the 20 MA. It's something. It's not that significant. 218. Okay. Let's move on. Spiders. Mention a little lower here. 323. Kind of an area. Looks like that could go a little lower. Oh, anyway, I'll be watching them all at the open. All right, oil. Diving down toward that prior low where it probably stalls, and then we'll see if it holds there like it has. The next level is quite a distance to the downside there. Step by step, we'll see if it holds that one, how much it bounces or not, and then we'll assess it as it unfolds. Bonds moving up. I suggested buying TLT on Friday at the pre-market. This is now coming up to a little resistance, but that looks like it's going up here. Right? Buy pullbacks. It finally bottomed out this long, downward sloping into support that we talked about for a month or so. Now we got the wide range bar up, and that looks like it's going higher, which means interest rates are going lower. Where's my TBT? Probably over here. And you can see the dive that they had, which helped utilities drive higher. And now this is going down. And as I wrote in the letter over the weekend, we'll be keeping an eye on not only this yield curve, but some of the shorter ones, because remember last year, as they were narrowing the markets, it's where they started their sideways consolidation there. Okay. And gold inching up toward that crazy reversal day that it had. Certainly look like they're going higher. We talked about the monthly chart, how bullish it is, breaking out of a multi-year consolidation. So that all looks good. And silver, it's pretty messy, but let's see if it gets out of this range here, and we'll see how it all unfolds. Just taking a look at Bitcoin for a moment. It's been kind of a mess, but that looks like it's bottomed out here. Nice triple bottom, just consolidating, and I like the look of that chart. And we got to keep an eye on see what the transports do here. This could be the tell as far as a bigger correction, or maybe not so much so, that they broke out of this weekly trading range. Now, if they can hold up here while the markets do their corrective thing, that's going to be a big positive. So we'll see what happens there. Anyway, so there's lots of red as expected here. There's been some downgrades based on this virus thing, some of the casino stocks, and even Tesla, right? Coming down here a little bit, down 23 points and so, and Apple down. So we'll see how far this all goes. Play defense here and adhere to your stops as you always should. And we'll update accordingly. All right. All yours, Daniel.
All right. Good morning.
Yeah, I like GBTC, right? Instead of Bitcoin, Tim. Yeah.
Yeah, I just put it in a 5-minute window, so or 15. I'll keep an eye on it. So yeah, we've been playing defense all of last week. Well, we've been playing cautious offense, but I've been tightening stops all week. Our inventory is the lightest that it's been in weeks. We only have 2 open trades in the weekly, 8 or 9 or so in the other one, but we're out of half to 2/3 of positions in a lot of things. Mirali, do me a favor and put your drop down to all panelists and attendees and welcome. That's a new name. We have Netflix. Yeah, all the fangs are down, but we have a 325 put spread for Friday. We have a nice open profit. And, I tighten the stop under Friday's low. It's gapping under it. We still should be okay with that. I don't see, we're in a Tilray covered call. It's gapping down. But I don't, and Lyft, we entered on Friday on that breakout. And the rest are not, those are the 2 biggest ones. And that's it. So we're not getting hurt bad at all. So we'll be looking for new opportunity. I was typing to Alex earlier. I just love multiple sell-off days in the spiders, get those internals cranked to oversold in alignment. And we only get setups like that, I think, once a quarter, but those are really times to clean up on the credit spreads, where we short put spreads on the spiders and so many other things, and then call spreads on the VXX. Preparation for 0DT. Yeah, I mean, it's not going to be easy though, because I'm thinking we're going to get more sell-off, but we could get intraday bounces. So I don't know, Robert. We'll, as always, we'll just apply our objective approach. And so when you have an event like this, trading news, you got to think, okay, well, of course we're going to trade the charts, but in terms of themes, if you will, of sectors that are going to move on this news, well, you got the whole global growth slowdown story, so that's the entire market. But you got travel companies getting hit, Wynn and LVS are getting hit. So I'm seeing a bunch of these little bios popping, so that's the theme. Oh, well, maybe they'll find a cure for us. So I don't know what these stocks do, but it looks like, this one had a beautiful blast off on Friday. Look at that % gain. And now it's up again, but nothing to do with that. Codex 275. Yeah, there's no, XBI looked lower. Well, it's why did you? No, but Alex, look, it's gapping down below 89s. You're fine. And that's because, that there's a lot of big stocks in here, and they all don't focus on, solving that virus. They do many other things, and so the pain associated with the broader market slowdown is hurting XBI more than what little individual components might be the beneficiary of this bad news. Hey, Murali, do you see where you're typing and it says TO:? Hit that drop down and change it to all panelists and attendees so that way everybody can see your comments. Murali saying, are we expecting to short today? Murali, we don't have any expectations until they set up. We'll tell you more within the first half hour or hour, what our bias will be, both for day trades and swing trading. But when you got big gaps like this, it's not a no-brainer. You know, I'm maybe shorting a bounce. If it can't go very far and then we get an intraday, whatever, double top on the 15, breakout failure, because as Greg said, the internals still have a ways to go lower to get in alignment. They aren't going to get in alignment on one day. It ain't going to happen. Unless maybe, you know, we gap down and sell off another 500 points and then get a beautiful reversal. So I don't know. We have the tools to know when we see it. Hey, anything gapping up is strong. So ABBV gapping up 85 bucks. It could be maybe a day trade long, but nah, see, you got resistance right there. ACHN, $7. That's a bullish gap. This could go, you know, 8, 9, or 10. Had a breakdown failure. 2 big wide range bars. This might be worth watching. I'm going to put him up here. ACHN. So GDX, Greg reviewed. Roku, I was looking at this Friday, you know, as a call spread. It still has these prior support levels, but if maybe 30-minute low, this might, you know, be a magnet to the rising 200. 553, it's a bullish gap, but no pattern. There's another, it looks like penny stock, you know, bio, whatever. SIRS, I don't like the pattern. APT, another one, I don't know what got that going, but that was a nice breakout. But look at the, look at this breakout, 100% retracement. Wow. Hey Ahmad, you're drop down also. Oh, thanks, Marielle. I appreciate that. This OPP, it looks like it might be gapping up, but if it's not gapping up, this is a nice topping pattern. You got a wide range bar close breakdown. That would be a continuation short. BOH, I can't tell what you're doing. I think it had earnings. ARNC, yeah, it had earnings. You know, we're gonna have bear gaps all over the place today. So these are not, and you know, it's funny. I'm sure this has happened to all of us. You go down and go to happy hour with your friends, and they see the market, you know, down whatever, or up or down 500 points, and they don't understand the concept of a gap, and they're like, "Oh, you must have made a killing today." Yeah. All right, this one's kind of opening flat. It's a climactic sell setup, but that's steady selling. When we do climactics, we like it to accelerate faster and then get some puking type volume. So nothing to do there. Sprint had earnings. You're a dog. Rambus had earnings. I texted to Greg pre-market. I said, this is a core watch. You had a breakdown failure. It's churning here at resistance. You know, target 20 to low 20s. It's been in a, look at that, 8 or 9 year trading range. Oh, it is after? Thanks. So whatever thing I was watching was wrong. They said pre. Yeah, so I'm still think we're bearish here at the open. The market's unable to bounce. And, you know, there's going to be people scared, particularly the ones that are holding nice open gains. That's why we've been selling in the strength. And I know some of you are, you know, talking about wanting to add into your IRA last week, and I sure hope I talked you out of it. Because, I mean, that's, you know, daily, weekly, monthly, that's not an IRA day. Shoot, what did I just have there? Neuro 338. That's a nasty gap, but no pattern. Yeah, LBS, they're getting, you know, down over, you know, 5% there. They're getting hurt on the win. Wow, win's gapping below the 200. That's getting punished. Ahmad Lake. The gap's too big and it's sloppy, but, you know, see if you can get an intraday setup. LCII, that was McGraw gave me this over the weekend. It's a beautiful 1, 2, 3. Let's see what it does in this weak market. ENTG. This was a short idea. I didn't put it in the letter, but I had it here to see what it did today. The gap's messing it up. VeriSign also had, and I was looking at short call spreads on that, but I think they didn't have weeklies. So those are, you know, went up vertical, so it has room to fall. I just don't like the big gap. And then there's THC. Nice topping pattern, wide range closing under it. That's kind of my recipe for a topping pattern. So that looks lower. Russ, yeah, I don't know. I wish we bought calls on the VXX. Yep. Shoulda, coulda, woulda. All right, looking at our opens, believe it or not, our put spread in PSA is green. I actually did a little chart lesson on this and put it in both letters over the weekend.